Not a great one, Scott. Nordstrom revealing net sales decreasing 3.5% for the 9-week holiday period. Nordstrom ranked with the banner decreasing 7.6%. Eric Nordstrom, the chief executive officer, saying the holiday season was highly promotional. Sales were softer than pre-pandemic levels. While we continue to see greater resilience in certain high-income cohorts, it is clear that the consumer is being more selective about spending given the broader macro environment. So clearly, weaker than expected holiday sales for Nordstrom, a company that's been trying to turn around over the past year. That is sending shares lower by 6% here in after hours. Scott?
All right, Seema, thank you. Steph, so I got Nordstrom's, and you can add, what, Macys to the list, right, of those retailers who are talking about, you know, taking their numbers down. Lululemon, right? Cream of the crop. Lulu. What do you make of this?
Yeah. Well, I mean, it just makes Nike and Costco that much more impressive, right? I think that department stores are in a world of hurt because there is so much competition. There's such inconsistency in product, in high inventories, and that sort of thing. And so, yeah, I'm not surprised at all on any of the department stores. And by the way, I also think Target is still going to have some challenges as well, though that stock is down so substantially from its highs, and we kind of know the bad news there. But I think you've got to be very, very selective in retail. And in fact, I sold Dollar General this morning because I think that it's held up relatively well in the environment that we're in. And I think they're going to struggle as well. It trades at 21 times. So I'm very, very selective in consumer discretionary, but I have been adding to pockets where I think there are opportunities, like D.R. Horton, like Wynn Resorts, to Nike, to Starbucks, some special situation stories. But you've got to be very careful in this space.
Let me you got some comments?
Yeah, I have a couple comments. One, you know, both Macys and Lulu have massive year-over-year inventory growth. So in our year-ahead outlook, we said you do not want to own companies that have built inventory, and I'm not surprised
well, every
at all.
apparel retailer is like loaded up to the the ceiling with
Macys and Lulu were two of the biggest year-over-year growth of all. And I think the other thing you're seeing is the incoming valuation to the quarter doesn't protect them. So stocks that trade at 7-8 times earnings, they still go down when they miss. So there's not, in the consumer discretionary space, you know, saying, oh, it's cheap, so it's probably okay even if they miss. I haven't seen any evidence of that where you miss and the stock goes up and everyone says, okay, the bad news is in there. So I think you got to be careful looking at the incoming valuation. I was just looking at what you were showing there and saying, valuation is not really helping me in a consumer.
Yep.